So for Bitcoin is going to be waiting for the PCE data that is coming this Friday. I think this is going to be the next metric that gives us the idea of where we truly are with the rate cuts themselves. Looking at the rate cuts bet right now, it's at 89.2% for a 25 basis points cut. And in particular, this one, if it comes out higher than 0.2%, this bet can come lower. Okay, and that's when you'll see the market start to panic again and do some sort of chaotic type shit. Okay, but we're gonna dive into that in this video. Going in tonight, we only have the unemployment claims data coming out, which is showing a forecast of not 219,000. But based on the way the non-farm employment change came out last night, are we going to get a true picture of where we are with the jobs data? Remember, we don't have the full picture with the jobs data, but more importantly, we've got the core price index coming out on Friday at 3 p.m. UTC, and that's going to give us a much clearer picture. This is the deciding factor because it is simple. Okay, the philosophy is simple. The deciding factor for core price index: is inflation going to be a problem? If not now, is it going to be one later? Okay, is the labor market telling us the economy is slowing down? Last night was very interesting. We had ISM Services PMI coming at 52.6, which is really, really good. It's telling you that the services sector, the 300 purchasing managers that were surveyed, they're asked the question, very plain and simple, how do they rate the current situation in the economy? So that factors in business conditions, employment, production, new orders, prices, supply, deliveries, inventories, you name it. Okay, so when those managers get asked that question, they just say yes, no, yes, no, yes, no. Okay, which gives a reading or a diffusion index and says, okay, this is where we're at. It's signaling economic expansion in the services sector. So what does this data tell us? What is it about purchasing managers that we need to pay attention to? Because this is going to help you understand really how to read macroeconomic data. Because then you're going to be able to interpret these data, come to the charts, and then be like, okay, where we're at right now. Okay, the Purchasing Managers Index, that's what the PMI stand for, is tied very closely to the M2 money supply. Because that is potential purchasing power, right? Potential. Now, if purchasing managers are in favor of economic growth, then what do you think these 300 purchasing managers are going to do? They're going to be putting money to work. That is telling us that the potential purchasing power of money is present and it's going up, which means that everything is going to follow because all that money is going to go back into businesses, the economy. And when you see a reading like that, it tells you there is expansion. Granted, there is a bit of divergence with the manufacturing sector. Okay, it's been contracting 9 times since the start of this year, actually. Yeah, January 2025. That's a bit of a problem, but the services sector is telling us a different story. It's giving us a different story about the services. So that means there's demand, and that's going to sustain the economy. So then the feds will ask the question, should we be cutting? Right? Should we be cutting rates? Well, on Friday, we'll have a much clearer picture with core price index. Because if we do actually get the core price index coming in, it's expected at 0.2%. But if that comes in higher, we're going to have a big problem in the marketplace. Okay? Because this bet right here can easily change on Friday if it's above 0.2%. And the next FOMC meeting, remember, will be in 6 days. It's going to be hella wild.